let's actually start off with some traditional earnings
All right, let's do it.
from Domino's. A so-so report.
Yeah.
But I think one of the things before, just to set a little context, I actually think that a lot of reports, especially from consumer-facing companies, um, they're going to be actually really important. They're going to give us a window into what's happening in our economy in the relatively short term, call it the next 3 to 6 months. So we're going to learn, like, okay, what did you experience at the beginning of the year? And then what do you see for the next quarter, like second quarter? And are you making any projections into the year? Because the one word that keeps coming up besides tariff in all these earnings reports is the word uncertainty.
Yep.
So how do we deal with it? So basically, the United States, for the same store sales for Domino's in the United States was off. It was off about 0.5%, if I recall correctly. I can click over, but I'm just going to keep going. And whereas on the international side, same store sales were up 3.7%. So why was it off in the US? Well, basically they didn't get as much volume. Not as many people came in to buy, or ordered pizzas, even though they were able to pass along an almost 2% price increase. So you're like, wow, what is that saying? And the commentary was, look, lower income people, those folks who are, really a little more conscious about how they, have to spend their money, decided that we couldn't come to Domino's as much. We had to find other places to go. Maybe dining at home is a better option. So that's a little bit of a window into what the consumer is facing. And then the other thing is their input costs were up, which knocked down franchise level gross margins from 17.5% to 16% in excuse me, comparing the first quarter of this year to the first quarter of last year. It's actually a pretty big move. That's nearly that's about 8% decline in gross margin for franchises. So again, we're in a lower growth, somewhat still inflationary environment. And I'm not going to take one data point from Domino's, but
right.
I'm so curious to see how the rest of the restaurants flow out and the rest of retailers flow out, because we had a little bit of sorry, I'll let you go. We had
go ahead. I'm sorry.
A little bit. No. We had a little bit of a similar thing from Chipotle last week, where their same store sales had a small decline, and it was volume based. People just not as many people coming to the restaurant.
Yeah, and I think you hit on what's really important when you're looking at companies like Domino's, and you mentioned it'll be interesting to see how the rest of the restaurant companies do, because there's so many aspects to all of what's going on in the world that will impact them. So first, there's is there any impact of tariffs, especially on input costs? Like you mentioned, input costs being higher, and that's going to impact margins. And then there's the results now, which is really just through March 31st, right?
Correct.
So kind of before all of the super tariff news, right? And then there's the guidance moving forward, which is a little bit of a clearer indication of what they might be expecting as a result of tariffs. And it's not just tariffs, it's the potential of resulting economic pain on people, which will then further keep them away from going to Domino's to buy pizza. But the interesting thing to me, and this is my sort of next couple quarters, I'm very curious about this. So when we went through the pandemic, I kept hearing companies talk about pricing power. And they were, just passing along to the consumers, and all throughout 2022, I was hearing this, all of their increased costs was just going right to the consumer as it could. And I remember saying to other fools as I was talking, into a camera back then too, when does this end? I was surprised how much pricing power these companies really had. So, but here's my wondering now for 2025, David, if they spent a lot of that then, how much more is there to spend now in terms of passing prices along to the consumer? So I wonder if input costs get raised on all types of businesses. This isn't necessarily specific to restaurants. Is the leash shorter to when they have to just start eating the costs and impacting margins and profitability because they kind of, spent that capital, so to speak, the last time we went through a period of increased input costs, because it's not like when the supply chains got back in order and inflation cooled off, it's not like they lowered prices.
Interesting, huh?
So that's what I'm interested to see. And when you were talking about the input cost thing, that's what got me thinking about that.
Yeah, that is a wonderful point to bring up. That is one of the things that we actually look for, as foolish investors, longer term investors. If you can find companies that truly do have pricing power, right? They're price makers, not price takers. That can be a wonderful thing. I will say I don't know the answer to your question.
Yeah, no, I don't know either. I'm just curious to see.
Again, Chipotle Domino's was able to raise their prices by about 2%. So they were able to pass some of those costs along. Not all of them if margins are going down, right? So, again, this is why I am so ready for these companies, retailers, anybody who runs we'll call it a thin margin business. Like, what are you going to do? Like, and to that point, most of them are saying, look, I don't know what my input costs are going to be, but they're going up right now. They could go up higher, right? Depending on where I source my inputs from. We will find out, and we're going to find out if again, the other thing we're going to find out is not only can those companies try to pass it along, but what happens in the economy in the aggregate, right? If prices go up too high, demand could wane. Like, some customers might just say, look, I can't buy that now, or they'll look for a substitute, or they'll just go without it altogether, right? I just have to spend my money elsewhere, and I don't have enough money left over to make whatever purchase I was looking to. So this is why I think all these companies over the next, call it 4 to 8 weeks of earnings, as we get through consumer facing companies and then retailers about a month later, I just want to know I want to know what happened, and I want to know what they think going forward, because I just think that's a great window into the short term. A great window looking at in the U.S. economy in the short term, and then trying to get a sense of what might happen, a few quarters down the road.